Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to look at another example, another very good example of our VSA setup or volume spike analysis setup we have in MTPredictor. At the moment it's a manual trade setup, so it's not found by our automatic setup. So what I'll do is, to start with, I'll just take off that DP, because you can see we actually had a lovely DP buy at the low of the day on, this is the 3-minute chart of the Nasdaq. We had a DP buy there, but I want to show how that's also a VSA setup. So I'll just take that DP setup off and now you can see we don't have any setup there. So I want to go through again what the VSA trade setup or volume spike analysis setup is. So let's use our training mode or chart replay and take the chart on the Nasdaq here back to, say, this bar here. This is at 12:45 in the afternoon, or just before lunch. So what are we looking for? Well, first and foremost, we're looking for a bar that goes through what I call a psychologically important pivot. So can you see here that fairly obviously this is where the market opened. This low of the day so far at 11:18 is a fairly important pivot. So I'll just place a low tag on that so you can see. So there we go. That's a fairly important level. Most amateur traders will see that around the 42.72 as an area where, if the market goes through it, to potentially go short. That's what amateur traders see. So let's move forward a bar. Oh, lo and behold, here we have a very wide range bar that's gone through this level. And now can you see the volume here? We paint this red. Now we don't assume that every red bar is a bar to act on. It just means that it's a bar to be aware that the volume in that bar is doing something unusual. So you can see here the market has now gone down below our psychologically important prior level. Most amateur traders would look at this and say, oh, this is selling, I now want to get short. However, at MTPredictor we have a very good tool which we call our decision point tool. This can be placed on the chart in advance, so you can go back to this prior pivot here and place that on the chart. And in fact, actually you can do it even before the market even gets there. So if I turn training mode off, and I go back to the first bar there where we started, what you can do is you can say, yes, I know this level is important, but if I right mouse click, place a DP on it, whoops, sorry, missed that, right click DP, there it is, you know that MTPredictor is telling you there's a level down here around the 68 to 65 level where potential support could come in. So let's see what happens. That's our first bar that breaks the important psychological low. Our VSA bar comes in to tell us this is something that's going on. We now look to the next bar. Now this is very important, because if I move forward a bar, can you see how the next bar has now given us a blue buy bar on our MTPredictor coloured reversal bars? But the most important thing is it's starting to fail to follow through. And also it's coming in at our support level here. So what do we know about this? Well, we know that if this the volume on this 1248 bar, this big bar, is truly selling, then the market will carry on down lower. But what happens if the market reverses and then comes back up again? What does it mean about the volume in this 1248 bar? Well, it means that it's actually buying by professionals. It actually means the professionals are stepping in and going long and taking positions off the amateurs to then go on the opposite side to what the amateurs are doing. It's called a classic fake out for any guys who've been around for a while. So how can we trade this? Because it's all well and good knowing that the market may make a high volume spike going through a prior level and that the professionals may be stepping in the opposite direction, but how do you actually trade it? Because you have to then create a trade setup in and around that allows you to come in with a small controlled risk and have a profit that's larger than the initial risk. Well, first and foremost we have our DP level. That gives us an area of where the professionals tend to move the market in and around. In other words, that's the level that the professionals tend to act at. So we have that on our chart. We have our blue buy bar to tell us this could be the bar of the reversal. We then come back to our last pivot high, which was here. This gives us a potential initial target, and I'll show you how we can perhaps extend that out a bit further, but that gives us our initial target. We can then use our risk reward tool in and around our blue buy bar. So if we went long, one tick above that high, our stop, one tick below the low, and our profit at that particular profit target, we now know that the profit could be potentially 3.9 or almost 4 times greater than the initial risk. Remember, we use correct position sizing here to keep our initial risk small and under control. What I'll do is I'll just take that previous bar off so we're not confused. So in other words, we are potentially entering at a reversal with a small controlled risk using our position sizing with a profit that's potentially greater than our initial risks. So this is the extra tools that we have in MTPredictor to then be able to place a trade in and around this VSA setup. Let's move forward. We're now taken into a long trade by the bar going above our entry stop. Our entry stop. We then have a protected stop placed in the market there. Let's see what happens as we move forward. Market starts to go up, starts to go up, starts to go up, goes sideways a bit, then suddenly, bang. This is when the Fed makes their announcement yesterday. This is at 2 o'clock yesterday. The market goes straight up into our target. So you could come out at this particular level and say there's a nice 3.9 profit. So just the trade setup in and around that would have actually had you long from pretty much the low of the day into the first target there for a profit of almost 4 times greater than the initial risk. Let's turn trading mode off. What I thought was very interesting yesterday was when the Fed made their announcement. Now the market then carried on and moved higher after that. So you sort of wonder or suspect, I wonder if the professional traders who are getting along around here were actually suspecting, or actually maybe they even knew, I don't know, what the Fed was going to announce, and that would move the market higher. You tend to sort of looks a bit suspicious, doesn't it? But the major thing is that we are long from here. Basically our VSA bar setup here caught the low of the day and we're long. If you then wanted to say, well actually because the professionals are stepping in here, I want to run this a bit further, where could you run it to? Well, if we go out to our 15-minute chart, remember we can place our DPs on in advance, so when the market is in and around here, where the Fed is doing their announcement, we go back to the prior pivot high, which is here, right mouse click DP. Remember this would be on the chart in advance, so before the market even got up here we'd have had this resistance level up on the chart there in advance. In fact, I'll actually do that just so you can see in the video. We just remove that. Let's use our trading mode, come back to around about here, and we go back up to this prior pivot. And there you can see it's on the chart in advance. It's there ready for you. And as you can see, that's exactly what the market did. So how could you have run your current long trade a bit further? Well, rather than coming out at this level, you could say, well, actually, I want to try and look to run it into the next resistance area. If you had have done that, that pretty much caught the high of the day, and that would have been a very nice 9R profit. In other words, a profit 9 times greater than the initial risk. But that would have been quite an aggressive trade. But I just wanted to show you what the market did by going to the next resistance level that would have been on your chart in advance. If you hadn't have done that, and you just come out at your first target, which would have been 3.9R, that would have been a very nice trade indeed. And what a great trade setup, coming in long off pretty much the low of the day. This is where the MTPredictor VSA trade setup, remember it's volume spike analysis, so we're looking for a spike in the volume in and around a bar that breaches a prior important psychological high or low in this case. We want the reversal around our decision point area, come in around our blue buy bar. We then have our target with our next DP area, and our position sizing ties up the trade setup using the correct number of lots, contracts or shares, etc, etc. So a very good trade setup there that would have you long pretty much off the low of the very bar of the day. So a very, very nice trade setup. If I take everything off and then I put our automatic DP trade back on, you can see that that actually was an automatic DP buy on MTPredictor as well. But I wanted to show you this because this was also a VSA setup. So that's the VSA setup, and can you see now why it's one of my favorite trade setups? Because it gets you in the direction of the professional money. This trade setup here, we knew that the professionals were entering the market now and looking to move the market higher. And it's always better getting on the back or riding the coattails of the professionals and going with the professional money. So along with the MTPredictor Holy Grail trade setup, the VSA trade setup is my favorite trade setup because it allows you to trade in the direction of the professional money. And what a great place to look to take a trade set up there off pretty much the bar of the very low of the day there. So great example showing MTPredictor's VSA, that's volume spike analysis, trade setup in action yesterday on the 3-minute NQ.